What's up, guys? All right, so let's do a quick little recap here of this trade that I covered in my last video. So I got my 15 period moving average right here. I've got my 50 period moving average right there. And if we take a look at the volatility index, the VIX, we're way down here right now after that big spike in early October, below that, $15, $14 levels. So when those few things are present, low volatility in the market, and we're above those two moving averages, I'm a big fan of selling out the money puts every time the market dips. So if you didn't watch a previous video, guys, market dipped a little bit here, last Tuesday. We kind of opened up, at the downside of that range there on Wednesday morning. So like I said, we're above those two key moving averages. We got low volatility right now. For me, I'm looking to get into these pullbacks every single time. But instead of buying calls, which, isn't the higher probability option here, what I'd like to do is go sell these out the money puts, right? So what I did here Wednesday morning was I sold these puts down here at $29.45 for this coming Friday's expiration. So when the market opened up down here Wednesday morning, guys, take a look at this spreadsheet, right? And I put on this put spread. So I'm selling 7 of those bad boys, the $29.45 puts, when they're worth $9.50. And as protection, I'm buying the $29.35 puts at $8. So that's the spread I put on there Wednesday. And if we take a look at those options now, right, those $29.45s I'm selling for $9.50, $9.80, they're worth less than $1 right now. So the market is bounced. It has just sucked the premium out of those out the money lotto puts, and I collected that profit. So we head back to the spreadsheet, and I closed this spread today. So those puts that I shorted, I bought those back at 78 cents. So from $9.50 in just 3 days, those things deteriorate to under 80 cents. So I collected $6,100 of profit or premium on the side that I sold, and the side that I bought is protection at $8. I got rid of those at just under 60 cents, and I lost about $5,200 on that side. And the difference between the two, the $910, is a nice little paycheck that I pick up here on this trade. So I'll show you guys the Tastytrade real quick. And if you want to pause this and take a look at all those orders, you can do so. But that's a recap of this trade, guys. And this is why I'm a fan of selling out the money options, right? Market's up here, above $29.90, $29.95. And I'm selling puts that are already pretty close to expiration, all the way below that 15, below the 50, below the key 295 level, down here at $29.45. So what's great about this trade is that, in this particular example, I was right. I'm thinking the market's going to move higher after any of these dips, and that's what took place. So obviously, that does the quickest damage to those puts I sold. I'm able to collect pretty close to max profit relatively quickly. But what's awesome about selling these options, guys, is that I didn't need the market to move higher, right? I put that on last Wednesday. Those options expire here the following week, this Friday. It's Monday morning at the time of this video. And, the market could have gone up a little bit since Wednesday. It could have gone nowhere, just consolidated. And it even could have gone down a little bit, and it even could have gone down, pretty significantly. But all I needed for the SPX here was to not drop below $29.45, right? Close anywhere above $29.45, and those puts that I sold for $9.50, because they're going to be out the money, they're going to expire worthless. So max profit on this trade, if I held this until expiration, and just let both of these things go to zero, was about, little over $1,000. But anytime, guys, I can get to 80, 90% of my max profit, I'm taking that risk off the table. Cashing that check, I'm getting my money, I'm taking the risk off, I'm freeing up that capital, and I'm moving on to the next opportunity. So over the next few days here, I'm drooling for any kind of dip or any kind of pullback in the market, right? I'm patiently waiting for any kind of little move to the downside that's going to spike the premiums on those out the money puts. So once again, I can come in here and sell puts below the 15, below the 50. I'm going to sell them as far below those key levels as I can, while still getting, at least what I would consider a good risk reward. So nice little $900+ guys, over the course of 3 days on another put spread. Looking forward to the next video.